Well, welcome back to the Daily Stock Market Brief. Today's date is November 18th, 2020. My name is Michael Silva. We use technical analysis here Monday through Friday to get a good sense as to what the stock market might be doing next. In today's episode, we're going to be looking at multiple indices. Okay, we're going to hit it from the top down here. We're going to go SP 500, we're going to go Nasdaq, we're going to look at the Dow Jones, Russell 2000, the NYSE. Then we're going to break into some commodities. Going to be talking about some indicators, and then we're going to wrap it up with the overall conclusion. Obviously, you probably seen today, if you didn't see my posts on Twitter, I was being a little sarcastic, or my market dashboard. You can follow me on those platforms. If you just look in the comment section below, it'll be on the pinned comment or in the description. And then my market dashboard is what I post on my website intraday if I see any, things that pop up. Yeah, we got a lot to talk about today, but I'm going to try to keep it as quick as possible. I don't want to waste your time. Let's get into it right now. Okie dokie, we are back. Welcome. We're going to do the sector spotlight. I want to point out and follow up on some stuff that we talked about yesterday. Wow. Look at the very bottom of that list. Energy. The energy sector. What were we saying when it was up here for the last 3 or 4 trading days? Well, we said, let's look at the chart. It looks overextended. Here's the chart. This was the overextended. The RSI was overbought. And then we got this bearish type candle formation taking place. Does this mean it's going to crash down? No, that's not what I'm trying to say. There's a lot of people that try to, dissect what I say or try to create, ideas for what I actually believe. But let's call it for what it is. Down 2.91% for the day. Pretty bearish looking day. But, we are running up from about $28 in the last beginning of November. So let's keep the context here of this breakout. It's still positive. Yes, it is looking pretty bearish, kind of bearish engulfing candle. It was getting overextended. Very possible that we might retrace back down to even potentially fill this gap. But we got to play this one day by day to see what takes place. To be expected, this move to the downside. We knew that it was overextended. Now we're seeing it move back down, right? It's nothing crazy here. Just reading what the charts say. Here's the regional banking index. Financials are very important. We marked out all these circles where it gets overextended from the Bollinger Bands. The RSI we pointed out yesterday. Yeah, we broke out from ascending triangle, inverse head and shoulders, boom to the upside. I want to point out here that we did not capture the 5 EMA on this index. So the bulls are still technically in control, even though we had a down day of 2.12%. If we start capturing this on the downside, that's good for the bulls. We might be coming back in to retest this breakout zone where also the 20-period moving averages kind of posted at. The stochastics is still overbought with a slight divergence, and then we have the RSI kind of coming back down from overbought territory. Let's go ahead and hop right into the indices, starting with the S&P 500. We're going to be looking at the daily time frame. What I want to point out really here is just notice how the day ended below the 5 EMA. Was this just a fake out to potentially break out to new highs? Hey, it could be. I don't know. I'm not that smart. I'm just reading what the chart says, and what the chart has told me is the bulls have been in charge of the 5 EMA for quite some time now, and for once the bears now just kind of stepped in to play as the market tried to reach an all-time high. We cracked below 3,600, which was a key level that we were keeping an eye on, flushed pretty hard to the downside, still have some open gaps to fill. The VIX right here, inverted, bull pennant, was looking like it was breaking out, but then we kind of got this false little inverse inverted hammer, so we might be breaking back. Well, that's technically up when down because it's inverted, but I was saying that we'll have a target around 2750 to just a little bit below that, but I'll get into that here shortly. On this time frame, which is the 30-minute time frame, I wanted to point out the symmetrical triangle. I posted this out on Twitter. It looked like it was starting to roll over, and then we said, hey, if we start breaking below 3590 or whatever it was, 3600, I forget exactly the number that I said. Careful, because there's stops hiding behind this key level of support. You might be thinking, well, how would you know that there's stops hiding below that area? Well, first off, we can just look at the chart. This is why technicals are so important. We have this big gap up, and then it acted as support, and then when it broke through it right here, it flushed very, very hard. Then it came back up into this zone, acted as resistance, came back up, acted as resistance, and then they had to gap above it. And then look at the gap down this day, and then boom, bounce right from that level. So it goes without saying, that is a well-defined area of support, and it was a well-defined area of resistance. So chances are, if there's long positions, they're going to be covering right here, or have some stop losses. And then when they covered, or when they got stopped out, I should say, they flushed to the downside. It's nothing crazy there. Kind of created a bear flag, boom, flush to the downside. What are the key levels here that we got to watch out for? We'll talk about 35.50, 35.40, this gap. Now, in the conclusion section, I'll kind of wrap up my thoughts as to, what I'm getting prepared for if this sell-off continues. Here is the 15-minute time frame. Posted this one on Twitter and my market dashboard. This trend line, right when it broke, kind of had the sense that, hey, we're going to be heading lower. Boom, really started heading lower towards the end of the trading day. This gap right here is the gap that I just mentioned on the previous time frame. And notice right here to 35.40, 35.60, this zone right here would be the bottom portion trend line and this gap. Gaps typically act as support, and this trend line could very well hold too. So we can come bounce, 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 and then maybe break out to new highs. But, it's something to consider as far as a long position than just having to stop below that. Here is the VIX. This is the 2-hour time frame. I just wanted to point out the gaps right above us and this breakout of this. I drew this kind of poorly. I could probably draw it from here to there, but it was a falling wedge. We broke out, bursted up to the upside. I think this is more why I would believe as to why we can reach this 27 to 27.50 target zone and then potentially get rejected further. Is simply because the falling wedge right here would represent, a strong breakout up to this level. We do have the gap right above us right now that probably will get filled if this sell-off obviously continues. We'll kind of see here what takes place in the near future. We got the S&P 500 here, a couple indicators, the 200 period moving average and then the 50 period moving average. This is the percent of stocks above those two. So we were at 90 the other day. That was oversold. We talked about that. Now we're at 87.50. Hey, just so you know, that's still overextended. 81, yeah, we're sinking slightly, but that's still, way up there in my personal opinion. And when they both reach these levels at the same time, typically we've seen some sell-offs take place. So yeah, keep this in the back of your pocket, keep this in the back of your mind. Probably not the best time to go long. And like I said, in the conclusion section, I'll talk about kind of my plans on when I, am deciding to go long. Let's look at the Nasdaq 100. I'm putting this on here because everyone's like, why didn't you do the Nasdaq last video? Well, I'll do it now, but I'll just point out what's most important. 5-period EMA, the bears got control of it. Hardly, okay? Let's not put too much weight on this yet. Still, just because of the fact that we have OPEX, this week. So yeah, we're at the top of this trend line. It's been struggling to get above it. Got already one false rejection or false breakout right here. Boom, try to get back up. And now we're kind of sinking a little bit lower here. We'll see if this sell-off continues. If it does, look for this gap to get filled and then have probably some support around that range and or this gap too. So we got the 30-minute time frame right here. The last 30 minutes, boom, flush through the 50-period moving average and these other areas of support. Where can we look for the next possible level of support? I would say 11,830, whatever this is right here, this green level. The reason why is because it acted as resistance, broke above support, broke down, all sideways, boom, support. So it just has some clear history of support and resistance. Once support is broken, then becomes resistance and vice versa. So yeah, we're sitting at a very interesting level right now. We got jammed down to, where is this? We closed out 11,894. You look back, that acted as support previously, and then we rallied. So are we going to get a move up? Possibly. But if we start breaking below, I'd be looking at this as the next level to potentially play a bounce. And or if we start breaking below that, look at the 200-period moving average on this time frame. Also this gap right there. Then we have the semiconductors. Why am I showing you the semis right now? Well, because the semis make up a huge portion of the Nasdaq. Okay, they're weighted very heavily. We saw a little bit of a down day, 0.72, not too dramatic to be quite honest, but we have that bearish divergence still taking place. The Nasdaq will struggle if we start seeing the semis really start ramping lower down to that 50-period moving average again. So, be mindful of that. Dow Jones, the Dow Jones. Let's get into it. Dow Jones has been on this rocket ship move to the upside, right? We've been tracking this like, oh yeah, woo. Everyone's saying, yeah, no, stock market can't go down. Clearly can't go down. I'm getting lost in thought. It almost reached 30,000. We missed it by about, 50 40 points, somewhere around that range. Got rejected once, twice, and then this third time. So really, it's kind of like a triple top on the daily time frame. And then we really got rejected. Bears took control of the 5 EMA. But keep in mind, like, we're on the 5 EMA. I'm not going to hold too much weight on this. Remember, if you're thinking there's going to be just this massive crash, yeah, you potentially could be right. But let's look at the context. All right, chill out. Relax, look at the context. We blew up 12%. I don't know if that's 12% or not, but from 26,250 up to basically 30,000 in, this month. And then we just had, a down day of 1.16%. Yes, very bearish looking candle. Yes, the bears took control of the 5 EMA. Yes, it was overextended. But keep in mind, like, we need some more confirmation here before we, bears start throwing out puts to the wind, and then all of a sudden we just get more rallies into, Christmas. But like I said, we'll talk more about that in the conclusion. Here is the Dow on the 15-minute time frame. Broke out of the rising wedge pattern we were kind of tracking. I just want to point out 15-minute time frames oversold. Okay, so we might get some bounces. Now, where can we get bounces from? Well, potentially we might reach down to fill this gap, but it might not reach that low per se. We don't know yet, but I will just want to point out, hey, it's overextended to the downside on this time frame, so don't be surprised to see some rallies to the upside, and maybe they're dead cat bounces, maybe they're not. Like I said, we got to see where the market opens up tomorrow, and then we'll get a little bit more clarification when I post it on my market dashboard. Next is the Dow Jones Transport Index. I'm showing you this right now. A little bit of a down day, negative divergence. We talked about this rising wedge pattern. Saw something very similar back here in early 2019. Look at, like, this is I want you to pay attention to the move to the upside, okay, from 11,000 to 12,348. Look how sharp and aggressive this move was. Nothing could go up straight forever, unless if we're talking about the M1 money supply. If you know what I'm saying. This right here is a very, very overextended move. Look at this bearish divergence. This is not a good look for the Dow Jones Transports. It needs to take a breath, okay? It just has to take a breath. It gets overextended and it takes a move down. We call this out here when we move down. So we start breaking below this falling wedge, rising wedge, sorry. Look at the 50-period moving average to act as a potential area of support. And why am I showing you the Dow Jones Transport? Well, once again, it makes up a big, portion of the Dow Jones index, okay? So if the transports start really taking a beating, it's likely to see the Dow Jones follow. Let's talk about the Russell 2000. Going to try to move quicker through this. Russell 2000, back below this level that was a previous, it reached an all-time high today, right? So today reached an all-time high, didn't close there, got rejected. Why is it getting rejected? Well, we called this out yesterday. The RSI is overextended, okay? Yeah, it could stay up there for a while, but all you have to do is look to the left of the chart to see how long it's stayed there previously. And it hasn't stayed there, so it's due for a breath. Like I said, it moved from here in November, 150, to darn near 180. That's a very aggressive move. A lot of gaps to the upside, negative divergence, oversold. It's going to take a breath. This is why I say it's not the best time to go long. And like I said, in the conclusion, I'll talk about what I'm planning to do in order to go long in these markets. Here's the Russell on the 30-minute time frame. I don't know if I showed this chart or not, but it was a key level that I was looking at. Maybe I posted it yesterday. I don't know. But it's just a zoomed in look where you saw the high right here, and then it got rejected, then finally broke above, and I knew that. And when it got flushed through this point, we'll see a heavy flush to the downside. Where can this potentially bounce from? Look for this gap to get filled. 174 would be probably a key level, and then below that would be that 171 marker right down here, okay? And if you want to see this chart deck zoomed in or whatever, you can go to my website and I share the chart deck, or the link will be in the description and or the pinned comment. Let's look at the NYSE composite. Overbought again, okay? This one, the bears did not capture the 5 EMA. We're sitting basically right on it. And we have all these gaps to the upside. Yeah, down 1%. You got to, like I said, keep in context, all right? Overbought, negative divergence, overextended. The market's going to move down. It's going to have to take a breath. Does that mean it's going to crash down to all-time market lows? No, that's not what it means. It would have, the bulls would have to give up a lot in order for that to take place. But as I see it right now, the bears are kind of stepping in, and the selling is starting to increase simply because of the fact that we just been on a monster tear, okay? Context, we're down 1%, but since November, we're still up significantly. Let's take a look at commodities. Gold, not showing us much. Still a bear flag forming right here. Are we going to break down? I hope. Because if we break down, I want to pick up some right around this lower trend line and 200 period moving average. Keep in mind, the longer this base is out here, the higher the 200 period moving average moves up. The 200 period moving average should act and has acted and proven to act as an area of support. So the longer this stays up here, day by day, this will increase slowly into this lower trend line and higher. So it's going to be interesting to see how this one plays out here in the near future. Silver, inverse head and shoulders, descending triangle. You could probably track out a trend line from this low right here all the way up to here. If it breaks below that, I would see, keep an eye on 2250. Right now, it's not presenting the greatest buying opportunity because we haven't broke above it. And it's not creating the best buying opportunity because, we're not anywhere in a really buy zone. Like, I would want to buy some lower at the 200 period or the lower portion of here and then have a closer stop or just buy a breakout. It's not giving us much right now. I'm just, waiting for the precious metals to do something before making a move. Bitcoin, the shining star. Everyone's talking about Bitcoin now, and rightly so. It's up just tremendously, like insane. 10,500 all the way up to 18,500. It tiptoed there today. What do I want to point out here? I drew it a little differently. Symmetric triangle, we broke out. Now I just want to show that it's been trending the upper portion of the Bollinger Bands. But then if you look at this, it's kind of in a bull channel. Got rejected there today above the Bollinger Bands. Okay, it's sometimes hard to hold that level because that means things get very overextended. Then we have a negative divergence on the RSI. So this has been just a monster tear. Can it go higher? Yes. We have resistance at about 20,000 or 19 to 20,000. And we're getting a little bit of resistance hesitation right here. And it's overextended. Is right now the best time to go long? I'll let you decide that, okay? If you're a big Bitcoin hodler or, if you understand it and you think it's going to 100,000, whatever, by all means do what you do. But from a technical standpoint, I wouldn't touch this with a 10-foot pole at this level. I don't care if it goes to 40,000 because that only that means is I doubled my money. Guess what? I can do that with one options call. So I'm not really too worried about, FOMO or fear of missing out on this particular quote unquote asset that, I don't understand it. That doesn't make the people that do understand it wrong by any means. They're a lot smarter than me, these people that understand cryptography and cryptocurrencies. I don't, and maybe one day I'll learn more. Let's go into WTIC, light crude oil, still within this risk range. I will say though, it's kind of printing a bull flag. It's basic, so it's stronger and stronger. It's holding this area. It's done that before, okay, and then sunk lower. So let's get above 40. I guess 45. So it has some work to do, but still it's within this gray zone, which we've been considering a risk range. Above 50 on the RSI, trending upwards, MACD sloping up, it's above 0. Hey, that's good. Okay, we might see oil start to move. Let's wrap this up here with the conclusion. Okay, so I've been saying that, we'll wait till the end to get to the conclusion and I'll wrap my head around, my plans. Okay, just because the market fell one day, right, out of 100 days, I want everybody to understand that it doesn't mean that I would just be hopping in and shorting this specific trade. No, that's not what it means. Okay, first off, if you didn't short the overextension already, you missed a big portion of that move today because of the just kind of strong move to the downside, even though it was only 1%. All right. My plan specifically is to look for the gaps to get filled. Okay, below us, the gaps to get filled. And I plan on scaling into major areas of support. So what do I mean by that? So if the price continues to come down, I'm going to be looking at those levels, those gaps to get filled, and or if it's a major area of support to be buying long, and then I'll have a stop below those levels as a shield. Why is that? Well, first off, you got to understand the overall thing taking place in the markets. Maybe the sell-off is taking place now, and then we're going to get some big December Christmas rally after the Fed meeting, or December, I forget the date, when all of this stuff kind of settles down. All right. So I'm looking at scaling long or getting into long positions when we pull back to fill gaps and major areas of support. That will allow me to get into a lower price point and then have a decent stop that makes sense from a risk versus reward standpoint. I'm not in a rush to just throw all my money in right now and then hope for it to go crash or for it to just go to all-time highs. That's not what I do with my money. Or my trades or my investments or whatever the case is. I want to just be very tactical here because things can get very volatile very quickly. So when it comes to you trading, investing, you might be getting this feeling of all this hype and euphoria that we're starting to pull back and we can buy this dip. Don't buy a dip just to buy a dip. Make sure that you're buying a dip at a key level of support and that you have a stop loss, because chances are if the market does sell off, you'll get stopped out probably pretty rapidly. And you need to be okay with losing money on these moves as long as they make technical and strategic sense. All right, now from a shorting perspective, if we keep moving up higher and higher, we're going to be looking at areas to short. I'm going to be, looking at areas to short in overextended territory. And I'll make bigger long positions in extended territory as well to the downside. So that's what I'm doing. I'm playing extreme highs and I'm playing extreme lows, but I'm also in the middle buying into areas of support and gap fills. Okay, it's a very simple type strategy, but it will allow me to couch bounces if the market decides to sell off, and it'll allow me to short at market extremes. It's pretty simple, nothing crazy right there, and I always honor my stop losses, okay? You got to be strategic in these times, and you got to make sure that your number one focus is capital preservation, okay? And as a side note on all of this stuff, if you're still listening right now, I got to talk with Michael Gayad today. And if you don't know who that is, I'm sure you'll know soon because I'm going to be bringing him on to my channel and he's going to be discussing why risk matters so much. And he's going to talk about the fund that he runs, probably talk about his books, the lumber to gold ratio. He is friggin' brilliant CFA, all right, and an author. So can't wait to do that. And, like I said, I'll let you know when that happens. Yeah, that's all I got for today. See you later.